Burgess and Bolton's weekly wrap-up.
Hello, Ben.
Hello, Jeremy. Happy Friday.
Yes, happy Friday to you. Happy Friday to everyone. Thanks for tuning in to this week's edition of Burgess and Bolton's weekly wrap-up, where we look at everything to do with the London market, technology change, innovation. This week, we're going to go back in time, Ben. Way back.
Yeah. When we were young.
When we were young. Yeah, I know. I didn't recognize.
Little boys.
And we're going to play a clip from, I think it is 2020, Ben. I was trying to actually pinpoint the date, where we first review the Blueprint 2 initiative and ask 6 questions. So we're going to go back and, as we often do in this show, see whether we were right, wrong, anywhere near the mark, or completely out the ballpark. So, yeah, that'll be fun, something to look forward to.
Yeah, definitely.
So let's kick things off, Ben. So I saw a bit of news this week. So there was the NVIDIA GTC 2026 event, which is a big, huge technology show run by NVIDIA, where people put a lot of emphasis and stall on what the CEO said. I think he spoke for nearly an hour and a half about different technologies and shifts and trends and things like that. And I also saw an article on Slipcase that actually took me through to HyperExponential's website that's along similar lines, looking at kind of AI development and sourcing models. And so what I thought I would do is just quickly just kind of pull out some, I think, interesting themes from both the event and the article, and perhaps where they converge and might differ, and also kind of the implications for insurance, specifically the London market. So what's interesting, I think, is this shift in AI right now, where in the past we were talking about which model was best, and in the future it's going to be about how you actually build different models into your business and get them to interlink. And this is kind of this idea about agentic. And what's interesting about these 2 articles, it kind of splits the world, especially the HyperExponential one, splits the world into kind of 2 areas. So firstly, kind of cheap, smaller models, good for everyday tasks and summarizing and extracting and those types of things, and then kind of larger frontier models that are still best for kind of complex reasoning and kind of multi-step decision making. And I think the biggest kind of differentiator now is not which model you should have, but actually how you use it. So it's coming back almost to core principles around what's the data you're using it on. You know, is that part of your USP? So for you, Ben, you know, your data running AI models over the top of it. It doesn't matter what model you're using. It's actually the data that is the key for this. And then it's getting those workflows right in order to kind of get the outcomes you want, and then starting to put in maybe decision-making steps within those kind of workflows once you're confident with the results you're getting. So I thought it was really interesting, kind of that move from kind of models to more kind of ecosystems of different platforms, or whatever you want to call it. Because for our world in insurance, I think it makes it more makes it easier to understand how these can be applied into our current workflows. And then I think if you take the NVIDIA conference, which is kind of much more blue sky thinking, you can see how you're on a kind of journey, on a roadmap to becoming a kind of much more agentic solution. So if you take automation right now and you think about bordereau or just kind of triaging submissions or something simple like that, you can see, and people are already putting in place kind of workflows and kind of smart automation. And then the next step will be kind of plugging those together with other areas of the organization in order to kind of get that kind of decision support happening, and then having humans in there. So I just thought it was quite an interesting, so rather than talking about the hype around it, I think what's quite interesting about these two articles, and I'll put them both in the notes at the bottom of the show, they kind of just put it in a bit more plain, simple English about how you can see them being implemented in organizations to deliver real value, not just kind of some blue sky, airy fairy stuff about what the world might be like in 10 years time. So yeah, it's a good couple of articles, I thought.
Yeah, it's good. I mean, I relate to that with our business. 2 points, I think. One is the importance of the data itself and the quality of that data, which we'll come back to in another story in a minute. But I think that is essentially what your business is data or knowledge in some shape or form. And that's as true of insurers as it is of me, I guess. And so the integrity of that data is really, really important. And I don't think you move to messing around with software until you know that really you feel confident that the judgments of the decisions you make based on those data are correct, and this is sort of saying that. I think therefore you have got to really work quite hard at saying, where does the AI help you? And I do think it starts, if you like, at the most basic level of boring stuff like bordereau and things like that in the insurance context, and I guess in my research context, very, very simple reportage, I suppose, at one level, which AI can do pretty well. But as you move up that hierarchy, if you like, if you see it as a pyramid, then you very quickly get into areas where you say, okay, that needs to be reviewed, sanity checked. It needs that experience applied to it as to what that decision is, and then ultimately into a judgment. And those judgments at the peak of the pyramid can be quite business critical, and particularly I think in any business, actually. I know we talk about insurance as being different in a sense, but I think it's as true in the oil industry or even the research business. We'll see a mistake that was made by a company in a minute that is pretty terrible for them, but you've got to run these businesses and the data in them properly, I think. And I think therefore, as you say, it has to, aspirational stuff about what AI might or might not do when you're messing around with it on your desk to find a restaurant or go on holiday is quite different from running a business. Yeah. And you could see, if it doesn't work, it'll constrain growth. It won't help growth. So I think it's got to be, as ever, great, sensible human beings who know their stuff, who know their business, saying, where can we use this and apply it properly? And it'll need some oversight.
Yeah,
from good quality people. So I think the loss of losing talent is still a big problem in business. So before the finance directors get too excited, I think we need to be thinking about the skills and the talents that we are retaining and investing in, as well as the software.
I think you're absolutely right, and I think specifically for the London market, I think this kind of vision, very practical vision of the future, does throw up some immediate kind of tensions, if you like, because we know and we talk a lot about the legacy technology that organisations are sitting on, that's very rigid and doesn't have the flexibility, or to put in the flexibility costs a lot of money. And which makes, coming back to your decision making, Benny, somebody's got to make a decision about which way to go, where to invest, which is very difficult, as we've talked about before, when this technology is running at such a pace. And then it comes back, and just to build on the points you were talking about, kind of it all comes down to the data. Well, we know that the data quality isn't that good, and you take the bordereau example. That's coming in multiple formats in various states of completion, and quite often not in a timely fashion. So if you haven't got those fundamentals in place, you're not going to put any AI that's going to make it better on top of that. So I think there's some real big challenges for organizations to think about as we kind of move into this era.
It's making us think about data, and that's, and the value of data and the importance and the quality and all those sorts of things. I think that's a good outcome.
Yeah, me too.
Yeah. And another thing that, when you mentioned the word frontier,
yes,
I can't help but think of that joke about Davy Crockett. How many ears, shall I do it? How many ears does Davy Crockett have? A left ear, a right ear, and a wild frontier. You have to know Davy Crockett is to know that punchline.
Yeah, I'm gonna look it up as soon as I get off this thing.
He was in the Wild West, So anyway, it's fine.
Right. Okay. It's a good joke.
It's even better if you know who Davy Crockett is. I tell you, then you'll be falling about laughing.
Yeah, that's what I was going to say. That's true. Good. Okay. Let's. Shall we do the Blueprint 2 stuff, Ben? So last week we were talking about the Lloyd's results, and we touched on the fact that the Blueprint 2 initiative had been put on the back burner and maybe shelved for in perpetuity. What's the word, Ben?
Perpetuity.
That's it. Thank you. It's a good job we practice this stuff before we go out live.
AKA canned.
Yeah. So we thought, well, actually, Ben
is dead, deceased.
It is an X.
The Monty Python sketch. Fine.
Yeah.
We won't do that.
So Ben thought it'd be good to go back to 2020 when the Blueprint 2 was announced, and we had some questions before the publication. I think this was recorded, and we had 6 questions. So we're going to replay kind of the clip now. You can watch the full episode, which is quite funny because we talk about COVID and all sorts of things that we've all forgotten about here. But let's play the clip and then we'll come back.
That's important. I think he also refers to something that is rather important to remember about Blueprint. Is unlike many of the other initiatives which have been funded by the market, the Lloyd's is owned by Lloyd's. So it is a project that's entirely under Lloyd's Corporation's control, as I understand it. So £300 million of senior debt was raised. That's not market money. So you can see that this is something that Lloyd's is doing, as Bobby points out there. And also, though, of course, that's a big risk because clearly, he's coming from this, and I don't think any of us would not know this, is that technologies, don't always, most fail. And so you have to go through that expensive process and difficult process to get to the place you want to be. So there's no question this is not still a challenging project. So just bringing it up to date before we get into Blueprint 2. So the Blueprint update came out, I think, in August, maybe slightly earlier. But the interesting thing about this is that we seem to have morphed without clear, explicit statements into something that is somewhat different, I think, from that original vision. And this is why we're really talking about Blueprint 2 today, because this has come up at the Tin Claims conference a few weeks ago, and it will be discussed going forward. And in the current situation in the global insurance market, this is pretty fundamental stuff. So the things that were different about the Blueprint update were, risk exchange is not mentioned very much. Certainly the volume risk exchange, business. Complex risk exchange is still there. Really, the emphasis now is on PPL, which clearly has had a boost because of the pandemic. Claims, this is kind of my personal take from reading it, and I think it was somewhat reflected in comments made at the conference, which was that as much has happened as could have happened. So there was a call for more action, less words. So there are some things happening. Gemini, I believe through Advent, has just been launched, which is an expert system. But these seem to be not, going back to Bruce Carnegie Brown's vision, these seem to me to be incremental small changes at the edges. They're not the fundamental things that we were expecting. And there is, in the delegated authority space, which is still on the, clearly on the agenda, one of the three areas that they're talking about, placement claims and so on, is the data manager, the ASATs and the contract manager system. So those are seeming to be going on. So the delegated authority space does look like stuff happening, but in other places it feels like a lot has been pared back. And the big question is, where did risk exchange go? Because that was such a big idea and was captivating everybody.
Yeah, I think so. And it was that vision, if you just reflect back to that opening video where you had those CEOs, supporting it and, people being excited by it. I think it was that vision statement by Bruce Carnegie Brown that, said, we are going to do this. It's going to be a digital marketplace, and these are the steps we're going to do. And that did invigorate.
And to be fair, though, Jeremy, there were some reading between the lines, and in there were some inferred warnings, I think, from all of those execs, particularly Oliver Butt from Allianz. They're talking about the execution of this.
Yeah.
But certainly, the Sheila Cameron, they're talking about, we will execute this. So there is, this is tough. Nobody's saying it's not easy, but nobody's saying it's easy. Pandemic definitely won't have helped. But in some ways, a pandemic has helped this. It has accelerated a lot of this stuff. So, it's kind of interesting what's going to happen next.
Definitely. We've got a slide about the progress to date. We're going to have a quick.
Yeah. So just very briefly, this is the statement that's been made, and then we can get into Blueprint 2. But these are the things that have been achieved in 2020. So this is really, given when it was originally launched, the first kind of deliverables, as it were. So they've cut the time it takes to pay claims through the updating of the Lloyd's Claims Scheme, but they don't say how much time is being cut. And I imagine that's because it's not a big difference. It's not being noticed. I certainly haven't seen anything on this in any of our research, right? So it might be good. It might have been another incremental improvement, but it's not the big thing that we're looking for. Submission quotes, APIs using PPL. No doubt PPL has moved on. Would have done it. It was mandated, and that was very fortunate for the market that people were up and running, and that had been pushed because it would have been a difficult situation without that. And obviously, you've got white space coming into that. So that feels, in a way, that feels a healthy space. But it's, is it still back to the achievements of Blueprint, or is it just that it's pretty obvious that everybody wants to get onto trading systems now? Virtual underwriting room building a pilot. I don't know what's happening with that. That just seems to be, that I've not heard. I've tried to read as to what that is. I still don't understand it. I don't think either of us understand what that is and what it's going to be. Syndicates in a box. Key has come on board from Brit. So that's, I don't think that was one of the things that I would have envisaged as being part of the original Blueprint, though. Key is something that has been developed as a lead follow model, which were happening anyway. And then something about the design approach has changed, which could mean anything.
Yeah. So we have we've just been talking about this week, and what we're looking forward to, I think, in the Blueprint 2 will be perhaps some more detail around the deliverables and the time frame, and some transparency around costs and timeframes and that type of thing. So we've put together 6 questions that we'd like to see answered. The fairly straightforward questions. So here's the first one, Ben. So I think it comes back to our opening piece from Bruce Carnegie Brown. Is the ambition and the dedication to change still there? That's our first question.
Oh, really important question. Look, this is about those having all those leaders on board, it's having all the big insurers on board. It has to have confidence, and it has to have belief, and it has to have buy-in, and it has to have, of course, it has to have execution as well. But does it feel like the ambition and dedication to change is there? My personal opinion is it feels a bit flat at the moment. So I would expect and hope that Blueprint 2 will be about reinvigorating this. But whether it is or not, I don't know.
Yeah. Our second question would be, so how is the trading environment going to change and be supported post-COVID? I guess that's touching on the kind of PPL white space conversation we had.
Yes, I think this is a really important question. The one thing that has maybe not only because of clearly not only because of the Future at Lloyd's program and Blueprint is that electronic trading has taken a leap forward, and it's not going to stop. You also have PPL in competition with Whitespace, and I guess you're going to get others. Bobby's Turan's company, for example, PathPoint is another, has a very good trading system for ENS business into the market, and there'll be more of those, and that competition will probably improve things. I think I would sort of agree with that. So, but this trading environment is really important because it's central, I think, to everything that happens once you get everything going. And the Lloyds have said that the complex risk exchange, which they're still talking about as being part of PPL, will link very closely into the claims development. But the question then is, because remember what this is a Lloyd's program, £300 million behind it, and it's Lloyd's thing. But if it's going to go the way I think it is going, which is it's kind of competition is just sorting it out, then is that something that can be managed in a kind of command and control way by Lloyd's, or is it just that they are there to facilitate the competition and make sure everything is done and licensed properly? I don't know. I feel a bit like that should be clear, that path forward.
Yeah.
And Lloyd's role in it, I suppose. I mean, they do license these, so there's only 2 licensed one at the moment, which is Whitespace and PPL. But I suspect they might let more in.
Yeah. We shall see. So that's our second question. Third question. So what are going to be the deliverables and what is the time frame? I mean, a fairly simple question, you would have thought. Yeah,
and I don't think that the communications on this, clearly it's their project, they could do what they like, but I do really think it's be so valuable to give hard and clear deliverables, because a lot of the phrasing of the things that are happening, people don't understand. Even people in the market don't understand what a lot of these things are. These are new descriptors. I had to sort of look up the Advent system, Gemini, to check what that was. Now, there's absolutely nothing wrong with it, but I was trying to, I think it should be just clear. It feels to me like it's a bit like saying, hey, here's all these things that we've done, but it's not clearly transparent about what Bobby was talking about. I'd like them to say, well, we had a few failures, things that didn't work, and invite the market in to talk about how they could have helped. At the moment, it doesn't feel like the market is as involved as they promised it would be.
Yeah.
And timeline is key. Sorry, just one further thing. Sorry, Jeremy. Timeline is absolutely key because I think Lee Elliston at the conference the other week made the point that if you don't deliver soon and really deliver and show the big boys that you are delivering, all of those leaders who were on that original video will be getting on with it themselves.
Yeah. And I think, Lee was saying about that fragmentation piece that was during the Future at Lloyd's in the claims environment talk. Yeah. So, fourth question, what is happening with risk exchange? That's, again, a fundamental, straightforward.
Yeah, no, I've got one big issue here, which is if it was such a big thing originally, the volume risk exchange, please explain why it's not there now and if it is ever going to be there. Because I just think everybody I've spoken to and engaged with said that risk exchange was potentially a good idea. I know brokers wanted to understand exactly what it was and it wasn't cutting them out and it was, but but I still think that generally speaking, it was seen as a positive move, potentially, and something that was achievable. But if it's not now, I don't think that's necessarily a bad thing, but it would be good to know why and what this complex risk exchange is going to be. I think if it's just an iteration of, and it morphs into just, well, it's just basically PPL, then that seems to me to be not a success. It's not a bad thing.
No.
It's not a success against Blueprint.
No, and it's a missed opportunity, I think, because I think, we'll probably touch on this in a couple of weeks' time, but I think everybody, especially I've talked to as well, said, as you said, this is achievable. The technology's there. It's, you could really deliver something and show the market.
And I think it's to, I think Bobby Turan again, just referencing all of our guests over the last few weeks, but Bobby did say about, he felt that Lloyd's ought to be at the vanguard of change. And I think that's what we saw in the video at the beginning. And what John Neal has said is, and that's my question is, if you don't have risk exchange in this Blueprint 2, what is, why is Lloyd's at the vanguard of change? Well, if it's stuff that's back office type administrative stuff, that's not the vanguard of change. A global platform, technology platform for distribution via Lloyd's would be something bigger, much bigger. It's a much bigger idea. But if that's gone, then it's gone. We'll find out.
Yeah. Next question, is claims going to be at the centre? And if so, what's the detailed plan for deliverables? Yeah, it picks up on the themes that were raised at the conference a couple of weeks ago. It comes back to that communication piece. We ran a poll, if you remember, Ben, where we asked the audience at that conference, I think we had 300 people on the thing, whether they thought they had enough information about the future at Lloyd's and Blueprint, and it was a resounding either no or could know more, I suppose, is the was the
that was really disappointing, and that's an audience that is absolutely should be in the know about claims and what Lloyd's is doing on claims. I think claims will be central. I think it will be really important. I think they've certainly cottoned on to this. I really want to see, though, what the detailed plan is and what the deliverables are. I don't think, my view is that there are clear and easy deliverables in claims for Lloyd's that could put them head and shoulders above other markets in the world. And I just, again, my view, I know it's reflected, I know other people feel this too, is that the things that they could do that would and they should do, whether they will do, big question. Claims right now in the middle of the pandemic, and given what's been happening, would be a fantastic big win for the market. And it would, it maybe you could say risk exchange wasn't really the thing. But claims would be a really big win.
Yeah.
And it would help the customer, right? Where's the customer gone in all of this?
Yeah. So so our final question, how much has been spent so far and what has been delivered from that money? It's a lot of money, isn't it? 300 million?
Yes. And they don't have to tell us. They certainly don't have to tell you and me, but they might have to. It might be sensible to say what, in a realistic way, they've got to be constructive. As Bobby again said, it is tough. Not everything works, but people understand that, I think. But against what's been delivered, where has there been bang for buck? I suppose would be my question, because we can all learn from this. I don't think this is us having a pop at Lloyd's and whether they've wasted money again. But it's basically saying if there were bangs for buck in the trading area, great. If there's bangs for buck in the back office of DA delegated authority, great. And if there's none in the, another space, then good. We will say that's a really interesting thing that we've all learned. That's still a thing that needs to be resolved.
Yeah. So that's those are our 6 questions, and they're going to be the themes that will hang our show off for the next couple of weeks once the blueprint has come out, and we'll obviously have a chance to read it and digest it and come back and give thoughts and analysis.
Will it be a Catherine Wheel or a damp squib?
Well, who are those two young men?
full of themselves, weren't they?
God.
We've been beaten into submission, mate, since
Yeah.
then.
God. Yeah.
We've had so much spirit and spark and vim, and we thought Blueprint was going to be a brilliant thing.
Yeah.
So I think it speaks for itself, doesn't it?
Yeah. I mean, they were good. Like you said, they were pretty good and simple questions to ask at that point, and that was 6 years ago. And
not one of them has been answered.
Exactly what I was going to say.
Not one. I mean, that if they'd answered one question, I'd be happy.
Yeah.
But they've not answered any of the questions, and they've put it. They've sunsetted it. They've even invented a new word.
Sunsetted. But the cost has a long tail. Yeah.
Right. How much is it though, Adrian?
Yeah.
Who knows the total?
It's some more.
Yeah.
Bring back the Hawaiian shirts.
Phil, you're right, mate. That's exactly what we should do. Our sartorial elegance has dropped down, although I like Jeremy's jumper today. It's lovely, lovely
very smart. Very smart. Yeah, there we go. Well, we will perhaps have a look at some more reminiscing packages from the archive, and see what we got wrong next time.
Tier 2 I was in, didn't I? So I was in tier 2. We were in then.
Yeah, I don't even know what that means.
No, I don't know what it was. I don't think it was fine.
Well, there we go. Right. Let's jump back into data because you saw this this article. I heard it on the news yesterday where YouGov withdraws survey which show rising church attendance in England and Wales, and I think the church had been using the figures in quite a lot of publications and marketing material, as you would. If it was showing positive results, but there was something wrong with the data, wasn't there?
Yeah, I brought this story up because I think there's quite a few stories at the moment about data, and we talked about data a lot, and it seems to me we're getting into a real mess. And it's not like it's never happened before. Nobody's saying that, but there is some, and I also feel the need to defend myself as a person in the research business, but and talk about something this is kind of a story really about integrity and data and how you should use it. And it's YouGov, it's the Bible Society. It's a simple survey they did to ask people if they were going to church. Now, this was done in 2024, and yesterday YouGov have admitted that they were probably open to some kind of fraudulent or random responses from people which made the data go wrong. So the data in question was really around 18 to 24-year-olds going to church, and there was a lot of headlines at the time. I remember them saying that amazingly in the modern world, young people are turning to church, just like they said they were stopping drinking alcohol as well, apparently, but then that's all been now questioned as well. One thing, right? So in any data thing, you've got, I think, this is what we do in our business. You've got to know what you're asking and what your expected outcome is and what you think is going to happen in the context of everything. Data on its own does not work. Just sticking to a number and saying it's correct because I followed a methodology is definitely not the way to go. But this is exactly what YouGov seems to have done. They got a number that said that church going had risen among 18 to 24-year-olds between 2018, when it was 4%, to 16% in 2024. Now, on a consumer survey, that's a massive rise. Churches would have been overflowing with young people in them. Now, I don't know if anybody's walked or wandered around a church recently, but my impression is that most people are definitely 75 plus in the congregation. And the churches are not full on a Sunday morning or whenever the services are. So I think that the evidence of your eyes would probably tell you otherwise. In fact, there were other surveys that had been done where both academic surveys and others, say by organisations like the Humanist Society that said actually the numbers are dropping, and they have been for a long, long time, and there isn't some change. So this was a real outlier number, but YouGov decided to dig its heels in and say that their methodology was correct and that this couldn't be wrong. So I think that was their first mistake. I think if we ever find something in our data, for example, that looks surprising, we immediately assume it's wrong and something has happened. I mean, that is the watchword of all researchers: is, you know, you've got to expect this. This isn't about finding surprising things, because you shouldn't really find surprising things in surveys. You're trying to assess basically what the current scenario is based on context and everything else that you know. So things that jump out looking odd are very things to be wary of. Now they didn't follow that, and they decided to go with this, and then they did, as you say, the publicity campaign, which drew a lot of attention, and the Bible Society kind of went with it because they'd been assured that these data were correct. And now they've said it was actually not correct, because what they did was this survey was based on inviting people through a kind of mailer type situation in which you're offered some money to do the surveys, and you could do several surveys to get the money. Now the numbers coming out there became a bit random. So there's a number of problems with that. One is, which they've drawn attention to in various articles. One is that you could have fraudulent behavior. So people saying, I'm just trying to get the money, so I'll just put a load of random answers in. You could also have organizations, you know, pushing a particular argument. That's less likely, I think, because people, funny enough, organizations just can't mobilize that many people in that way to do it. So you tend to get randomness. What the other one then, though, is unsurprisingly chatbots, or bots that can farm these sorts of things. And that seems to have been what's happened, so that somehow the data's come out incorrect and YouGov has checked it and said it's not correct. So, you know, in fact, fewer people going to church ever than, you know, they did. So, and then actually just today, there's been interestingly, another inquiry launched by the Competitions Authority into made up reviews on websites through things like FIFO and things like that. So that's another big one, which I guess we all know about these things and we're all a bit suspicious anyway. But the validity of these things as we move into a more automated age is quite important. So I think what I'm putting this up for is to say this is a warning, and to think and ask whoever you're dealing with on data, if you're a company, some simple questions. And I think if anybody says we are, you know, sort of slavishly following our numbers and our method, I would be very suspicious of. I had a chat with my team today about it and said, what are all the things that we do, not just the protocols? I mean, we don't have this problem particularly because we send out individual assigned links to people, so you can't farm it, and we know exactly who it's gone to, and then we double check it. And we actually have, as YouGov should, we have data assessments when it comes back to check for, you know, odd responses or flat responses where people just put a 0 into every answer or whatever, and those all get kicked out. So again, that should have happened here, but it didn't. But those are just the normal protocols that most research companies would use, or any data business. But then I think it's almost back to this human thing of the attitude. If we ever get something that's wrong, we will say, well, we're tracking it, so we'll just wait and see if that moves, or, you know, obviously we'll check it, but wait and see if it moves more or if it goes back, you know. So whether it's a patterned response, in other words, it's something you can start to trust and rely on and try and understand what's going on, or whether it's just something that was an oddity or an outlier that you get occasionally in data. So this is very, very bad for YouGov, because it seems to me that it actually doesn't just question their methodology on this study, it questions how they approach everything, not from just a process perspective, but from a kind of professional and people judgment perspective. And I think it's a real warning, because I think in the end you get found out, you know. I mean, you can't just go on with these things when clearly, as I said, the evidence of your eyes is that no, people aren't going to church. It's just, it's just kind of dumb to say that the data's right and everybody in the world is wrong. And it's something I was just saying, you know, we would never do that in a market. We always discuss these findings. It's a tool, really. And a final thing I'd say, I think it's the danger of the tip over or the blurring of the lines, if you like, between publicity-based research. In other words, as you said, you want to get a message across first and foremost, and that's it. And then you're tied into that because that's kind of what you got paid for, which is to get a certain result, versus actually we're doing proper research, you know. And if the byproduct, like our research, is that you've done well, that's fine. You've done well. If you don't, you don't, and that's the end of it. But to actually be paid to deliver a result is, you either are transparent about that or not. And I think this is true not just in research, it's true on things like YouTube and reviews and, you know, what they call shilling and all that sort of stuff on products. So we're into a world of which we bring back to insurance, which is what can you trust? So I think this is going to be, it always was quite interesting and challenging. It would probably be more challenging in an AI world. Yeah.
It is interesting. And just to come full circle to the conversation about kind of AI and people and process, that if you're bringing through that next generation of whatever they are, you know, claims people, underwriters, you know, what do they actually do? Where do they bring value? Well, it's having that experience and the context of receiving the data and information, contextualizing it, and then make a decision around it. And if you're relying on bots or agents or whatever it is to do some of that stuff right now, today, you know, you are in danger of leaving yourself open to just, you know, listening to the computer. So rather than the computer saying no, the computer now will say yes.
Well, the computer is trying to please people, isn't it? And to try and make money. And that's a very big shift. And I agree with you, Mike, completely, that does the computer say no, which we all know about, which is when the computer or the data asserts that you're wrong and you therefore have to pay a fine or a penalty or something, or you can't do X or Y or Z, which is absolutely crazy and frustrating. And at that point you realize that data, you need judgment, and your first feeling is, I need to speak to somebody who's sensible and knows what's going on. But of course these days you don't get that. What you get is just the ridiculous reliance and faith in the data, and the post office scandal is a great example of that, of course, you know, where blind faith in the data created such an awful situation for so many people. But you have this now, this has gone the other way. This is where you're using it commercially for those reasons. So I think that generally people put too much faith in data. I mean, I always have a phrase which I say to clients is, this is not truth, it's a tool, and it helps you to make a decision. But that decision should be taken in the light of all sorts of other factors as well as the data that we're showing you. And I think that's a reasonable, measured and sensible approach to it. But I do know that there is a, you know, a kind of naive approach to data, which is, no, we've done it. We've done the methodology. It's all right. This is exactly what it means. Yeah, no, go. You have to go with that, which is not the right way to do it at all. And it's pretty worrying when you see big companies like YouGov, which is a multi-million-pound business, you know, that has such a terrible flaw. You know, it shouldn't happen ever, not even once.
Yeah. Good. Well, we will be returning back to data, because we've got TinTech Data Jam coming up in June. So obviously that's one of the cornerstones of that event. And yeah, huge implications for the industry as we move forward. Good. Okay, that was a bit of fun. What are you doing this weekend, Ben?
I am not doing that much. I'm going out for dinner with my wife.
Excellent. I'm going to lose at tennis again. So
okay. Have you won any games in the last?
No. Okay. Ever. I've never won a game of tennis.
thinking in the last few months. It's like a survey question.
Yeah.
You play? Yes, I do play tennis. Okay, so have you won in the last 6 months? Have you won frequently? Say 3 to 4 times. Less frequently, say 1 to 2 times. Never.
Yeah, never. Yeah, that's me.
Okay, yeah. You'd be I'd have no problem with that piece of data and presenting it back.
Yeah.
Recommendation?
I should probably play more tennis and
Try
get better at
pickleball.
it. Yeah. Try a different sport. Oh God.
Someone,
Anyway.
and I won't say who it is, a celebrity died this week as a result. I mean, an older person, so he'd had a good innings, but died. It said at the end of the obituary, died as a result of a pickleball injury.
Oh, really?
Yeah. I don't
Wow.
feel I could say who it is because it feels a bit unfair on the family, although they won't be listening to this, I'm sure. I think they're a Hollywood legend. But died in a pickleball injury.
Is it a freak injury, or
it didn't say. I mean, we should do one week the causes of death at the end of obituaries because they always intrigue me because there's often undisclosed causes, but there's all sorts of different phrases. But it's the first time I've seen died as the result of a injury in a pickleball game. I mean,
does ask
it raises so many questions, doesn't it? I think it was in the mid-80s, in their 80s, the person.
Right, okay.
I mean, I didn't know pickleball was that dangerous.
Me neither. I was going to play it, but I'm not anymore.
Yeah, I wouldn't rule it out given your tennis performance, and I think you're probably right. It's unlikely you'll die.
Anyway,
but there's a phrase for it anyway at the end of obituaries, ready for you.
Okay, good. Saw that out, and more on that next week.
What's the difference between pickleball and paddle? That's what we should do next week.
Yeah,
or padel.
Okay. Well, thanks for tuning in, everyone. Enjoyed that a lot. We shall see you next Friday. Oh, no, we won't see you next Friday. It's Easter, isn't it?
It's Easter next Friday, yes.
Yeah.
We'll be back on Easter, yeah.
We will be back in a couple of weeks. So have a good weekend. Have a good Easter, everyone. And see you soon.
Happy Easter.
Bye.